For more on today's market moves, let's welcome in Steve Sosnick, Interactive Brokers Chief Strategist. Steve, it's good to have you on the show. And maybe to start, Steve, today's market action, we did see, major averages, as Julius pointed out, they ticked lower, and we are kind of in this holding pattern right here for that PCE report tomorrow. But of course, listen, the rally we have seen, Steve, we've come up hard and fast here. I'm interested just to start kind of your broad view of, where we're at, Steve, and where you think we're headed with the stock market.
Hi, Josh. Great to join you this afternoon. I think what we've been seeing recently is a bit of consolidation, and that's not something to be concerned about. I'll actually argue it's on the healthy side. We can't just have these situations where markets just rocket higher every day or every week. You need to have a little bit of backing and filling. You need to take some profits here and there, and that's okay. And I think that's largely what we've been seeing. This is still sort of the aftermath of the post-NVIDIA run up. But what the sell-offs that we've seen since then have been what I would consider just garden variety back and fill or consolidation, pick whatever term you'd like, as opposed to something that's fundamentally unhealthy. We covered a lot of ground in a short period of time.
Steve, I don't know if you saw the morning brief that I wrote about today, where I wrote about sort of the return of the FOMO trade or number go up. The idea that you look at the Yahoo Finance trending ticker page on any given day. Today it's Bitcoin and Beyond Meat for that matter. You have these, big swings in the market. Doesn't feel quite meme stocky per se, but it does feel like there is this enthusiasm. What do you make of that phenomenon that we've seen a return of?
Hi, Julie. First of all, I read the morning brief every morning, so I did see that. Even though I was traveling today, I did catch it before I got on the plane. So I've been calling this weaponized FOMO, actually, and I coined the term sort of as we went into the end of the year, where there was just this rush. Institutional investors had to be invested. From an institutional point of view, remember, if you don't want to be the underperforming institutional investor, you don't want to be the worst performing institutional investor. That's real fear. That's risk. That's career risk. From an individual point of view, which I think is starting to spread out here, FOMO to me is actually greed, because if I'm not the best performing individual investor, what's the difference? I can get a little jealous that that the guy next door is doing better than me, or my friend has made all kinds of money doing something. But ultimately, it doesn't really affect my life, if I'm doing okay, but someone else is doing better. But it's human nature not to like that, and I think we're really starting to see that element creep back in a big way. And I think that's why you're seeing when you're seeing stuff move, and I was going to say stocks move, but it's really stuff because Bitcoin is stuff, if that. And that's why some of these moves have been so ferocious, so tremendous, because people do not want to be left out. And certainly NVIDIA's move epitomized it. But you look at some other stocks like SMCI, which have been on parabolic moves for a while and then pulled back. This is to me is pure. It's pure FOMO, because it's not just about doing better than on a fundamental basis.
And Steve, I want to follow up on that, because the last time that we really saw this was the period of stimulus checks. It was a period where money was much easier, so to speak. That is, interest rates were much lower. Now we're in a period of much tighter financial conditions. Yes, people's incomes have gone up, but inflation has gone up as well. So I'm also wondering kind of where the money is coming from, in a way, compared with other periods that we have seen like this.
Yeah, this is an interesting one because, you're right. This is a sort of easy money type of market, but we don't have easy money. And as a matter of fact, I wrote a piece last week called "Dude, where's my rate cuts?" Because we went from this motif of having the Fed acknowledging that they would cut cut three times, which is what the market was sort of predicting before December, and then the market said, "I see your three, I raise you to 6 or 7." Now we're back to 3 for 2024, but stuff is proceeding as though the Fed was still actively cutting rates. Now, some of the concentration has been in stuff where they're delivering earnings, and I'll point to NVIDIA again and some of the other AI-related stocks. But we're seeing it in all kinds of other stuff. The idea that, let's say, a Beyond Meat today, which the numbers were good, but were they 33% better good? type of thing. No, that's a lot of, we're going back to this idea of preying upon the shorts. We're seeing a lot of activity in sort of smallish cap stocks that, that might start the day at 2. We literally had a situation like this where I don't even remember what name it was because it was a small position that got left on the book, basically. Some stock, opened at 2, closed the day before 2, opened at 7, and, then was like down at 1.5 afterwards. Some small micro cap stock. And I wish I could tell you what it was. I honestly don't remember. But this is the stuff that happens, and this is the kind of kookiness we're starting to see again. And that is a concern because this is not the type of easy money environment where this stuff tends to happen or should have, can be happening quite so easily.
And Steve, you all actually break down the 25 most traded stocks on the platform. Any surprises there, Steve?
Lately, not really. It's really been AI. It's been AI enthusiasm. Tesla has perpetually been the most active stock on the and option on the IBKR platform. Lately, it's been Nvidia. That should not come as a big surprise to anybody. AMD is always toward the top. Guess what? AMD is around the top now. It's SMCI. It's things like that. Lately, we've seen a lot of activity in Marathon and Coinbase. Again, not all that surprising. We're seeing it in TQQQs and QQQs. So for the most part, we haven't had a ton of surprises recently. And I guess that goes back to what the market has been telling us. There are some times where you get some oddball names, but right now it's been pretty much, if I gave you a few minutes and a pencil and paper, even if you hadn't seen them, you'd probably get, most of the top 10 pretty quickly.